Alright, this is my trade recap for today, January 7th. So this is what the chart looked like on the 30-minute. The reason I'm on the 30-minute is so this is exactly what it looked like as the market was about to open up, right at 9:30 Eastern Standard Time. I didn't have a definite bias going into a market open today because of this 4-hour gap. This was my condition. So NQ was still trading inside of it, looking like it was going to respect the gap and possibly trade lower, while ES was trading through it, looking like it was going to disrespect it, and looked like it obviously wanted to take the previous day high, as well as this liquidity up here. So I wanted to see the 4-hour candle from 6 a.m. to 10 a.m. Eastern Standard Time close at 10 a.m. to see whether we respected it or disrespected it. Typically, I'd like to see both assets do the same, otherwise it causes some confusion on where we're going to go. But we did close through this 4-hour gap on both assets, pretty aggressively too. So this is the 9:30 candle, 9:30 to 10:30, this one right here, and the market shot up and swept the previous day high on both assets. And there were no trades that fit my system within all of this. I was looking to see a 5 or 15 minute get formed and traded back to before taking out the previous day high, but we took it out immediately at before 9:40. So there was no opportunity to get in there, and so we then shopped around for about an hour here in this range. ES was moving. I found the two assets to be pretty uncorrelated today, which isn't a great sign for good setups, but that was one of the mistakes that I made today. Even though I won, I made quite a few mistakes today. All a learning curve. So price did sweep into this 5-minute. I guess this probably would have been a 15-minute. I'd even enter off of a 10-minute. Yeah, it swept into this 15-minute here and delivered higher. But the reason I didn't enter that is because we swept a significant liquidity pool, and so the retracement into this zone that I'd like to enter off of, it's hard to tell whether or not the retracement is a retracement or if we're reacting off the liquidity and we're just going to continue going lower. So what I look for is price to first respect the 5 or 15 minute that was formed from the displacement up to the liquidity pool, and then I'd like to see, like this example here, I'd like to see price open up a new 5 or 15 minute. Typically I'll take a trade off of any imbalance between 5-minute and 15-minute, 6-minute, 7-minute, 8-minute. It really doesn't matter to me, all the way up to 15-minute. But I do prefer to see it be a significant gap, meaning this is quite the gap between the two wicks of these candles. Whereas I think this is even a gap here, something like this. I think these might be like a tick away, these two wicks, which would be considered a fair value gap. Or this one right here, that's a great example. This, although I would still probably trade out of it, I have a lot more confidence trading out of a big imbalance like this one versus an imbalance like this. So when I seen this, I was really eager to enter the trade towards this 4-hour intermediate high on NQ. And after we formed this gap, traded up, and came back to it, the only thing that I was looking to see happen for me to enter along was the highest time frame inversion out of this gap, or out of this 5-minute gap. So I only check from the 5-minute down to the 30-second for inversions. So this 5-minute gap was obviously the highest time frame gap to enter off of, and as you can see, the first close, the first candle that inversed this gap, closing through it, was this one here, which immediately took out my target. So that trade was cooked pretty quick. One thing I look back though, and I seen the 6 minute. There's a 6 minute gap. That was, oh no, it wasn't traded through. I don't know why I thought that. Maybe it was a 7. I don't know what I'm talking about. Scratch that. So that's why I didn't take this trade, but it was a pretty good setup. I usually feel more confident with the setup the higher time frame the inversion is as well. So if price had closed, somewhere here, would have loved to enter that. Wouldn't have been a great risk to reward, but would have been very confident that we were at least going to take out this 4-hour intermediate high and possibly move higher. So continue to move higher, and we had another setup that fits my system right here on ES. From this displacement from this 5 minute gap, this 5 minute was open and this was a large imbalance, and ES traded back to this gap very slightly before taking off and going higher. But the reason I didn't take this is because NQ and ES being correlated assets, NQ swept this 4-hour intermediate high, which I consider a significant liquidity pool, and like I mentioned, seeing price come back into this zone after a liquidity sweep, whether it be on NQ or ES, it's hard to differentiate if it's going to just send price lower after the liquidity sweep, or if we're just rebalancing the imbalance. So I would like to see price deliver out of this gap and create new gaps, and that's exactly what you see here. These gaps were formed, delivering out of that gap, and so if there was a retracement back to these gaps, then I would have liked to take a long, and that's exactly what I did. So this level here, this was quite the technical mistake of mine, and I got lucky today. This was a 4-hour bullish gap. As you can see, there was a large imbalance. I think this was when some tariff news came out and the market just crashed. There's a large imbalance here, and this was the beginning of the new 4-hour imbalance. And so price swept that right before I entered my trade, which completely goes against my rules. But this was just human error. I didn't even notice until after looking back. So I had a lot of things to journal today, and as much as I hate seeing myself go wrong, I feel like it really shapes myself as a trader and gives me learning lessons, opposed to having an A+ setup and taking it without thinking about what I could have done better. So like I said, these 5 minute gaps, where did they go? These 5 minute gaps opened up, and yeah, this one right here, very insignificant. Like I said, I'd still enter off of it, but beyond that, there was, where these candles keep going, there was a 15 minute or 10 minute entered here. It must have been a 10 minute that I seen. Nope. So it would have been this 5 minute that I entered off of, or it could have been higher. This 6 minute traded into a pretty obvious imbalance, but regardless.
Playing from Ryan Zest 25 Ultra.
Regardless, seeing this imbalance here stacked upon another imbalance, most of the time I would just mark this entire area as a 5 minute fair value gap, because before you have confirmation out of a move, if you're looking for a 5 minute inversion to give you confirmation of a reversal, you would want to see every single 5 minute in that leg be inversed, including all of them. And so this would be the last one in this leg, because we went up, came down, and this was our entire leg. So yeah, that's my point out of marking this as the whole 5 minute. Even though we didn't trade back into the more obvious 5 minute, I would consider this entire, almost this entire leg, to be an imbalance. And the way that price was moving, very bullish. Like I said, didn't see this level, so I expected that at the same time that I was entering, this is where ES was, and this was all-time highs, this level here. Man, this level. So we were right here, all-time highs were right up here, not too far away. And so at this time on NQ, I expected that ES was going to go up, NQ was going to follow. But I didn't realize that we just swept a significant liquidity pool. So I had the 5 minute, traded back into it, and then all I was trying to see was a close or an inverse, sorry, an inverse out of this 5 minute. And the highest time frame inversion out of this leg was the 30-second, which is also the lowest I would take. So we had a slow movement down to the 5 minute, and the only 30-second that was in this leg was this one here, which was filled but not inversed, but this one right here. And so the close through that was on this candle here, and then I entered here, and this would have been a break-even trade if I was trading normally, but I only took this trade on one evaluation account instead of my funded accounts, and the reason for that is because there were multiple reasons. It wasn't a great trade for many reasons. The 30-second was not a obvious imbalance to confirm that price wanted to go higher after closing through it. This was a pretty bad 5 minute imbalance that we traded into. It was lunch hour in the New York Stock Exchange, which is always lower volume and less direction. So there were multiple different reasons. And so the only reason I took it on the evaluation is because I only needed $300 to pass the account. I was just about passed, and I probably shouldn't have taken this trade, but that was the reason I did. And so any other day, if I would have taken this trade, it would have been break even, because my break even price was actually this 30-second high right there. But in the same candle, we also took out the internal high. And I closed the position early because there's no point in letting the trade ride out to my target. And the target was insignificant anyways. The only reason the target was there is for a fixed 1-to-1 ratio, as you can see there, 1 risk to reward ratio. Just because that's part of my strategy, I won't trade any less than that. But I closed it early because I was at the $300 profit that I needed to pass the evaluation account and get another funded account. And so there was no reason to let this ride out and take the risk of having it come back down to break even and stop me out like it did. So yeah, I got out pretty well right at the top of the day actually. We only went up a little bit higher, but this would have been break even. For this, most of the time I always put my stop at the internal low, but I put it at this low for the reason that during this time on ES, we traded into an imbalance here. There would be a 5 minute in here. And this was, these two candles created the low on NQ, as you can see, right at 12:15 and a half. And over here is that time. So this low within these couple minutes was formed here, and was then swept out on ES. So we traded up, acted like we were going to move higher, and then we manipulated lower right here in this leg. And so if I was trading this on ES, then I would have put the low there, and that's the exact candle at 12:18 that I put the stop here at this low. So that's why I put that there. Like I said, it was a fixed 1-to-1, so this was not a significant level at all. I was just hoping that price would rip a bit higher than this internal high, which I had confidence that it was going to take, and it did, but then it came back to break even. That was pretty much it. I have, here's the certificate for passing the account. It's the 5th funded account I have, so $250,000 of funding now that I have access to across a few different companies. But yeah, definitely a few learning lessons today out of this trade. Looking back, a little bit disappointed that I took this trade, even though I won and passed the account. These are not the kind of trades that are going to make me money long term. Yeah, that is pretty much it for this January 7th trade recap.